Hi everyone, good afternoon, welcome. It's Chris and Seth here from Compass, and welcome to the first episode of our new webisode series called Need to Know. We're happy to have you, and we're going to get started in just a few minutes here. Today's topics, and we're hoping to do one of these every quarter on a variety of industry topics and changes to our industry. The first episode today is going to be about some Compass updates, some changes we've had, as well as the Secure Act 2.0. Seth?
Yeah, and as Chris mentioned, we're going to be doing these once a quarter, and we have different guest speakers from our company speaking as well on these during the time. But today we want to give you a little update just on the company, because I know earlier this month, we sent out an email to all of you letting you know of some changes here at Compass. And so one of the things of the big changes we did is we reorged the company a little bit. And how we reorganized the company is we realized with people getting so many emails a day, phone calls, all that, it was hard for a lot of our administrators, our liaisons, to actually do A to Z. They were getting struggled, they were working too many hours. So we decided what we're going to do is make it so that there's relationship managers and there's a compliance team. So that means what's going to happen is you'll have one dedicated relationship manager, and that relationship manager is going to be able to answer all your questions. And then in addition to that, there is the compliance team behind the scenes doing all the work, all the compliance testing. Both are industry experts. You're going to have great service this way. In addition to that, we also started layering some additional liaison help. So there's going to be dedicated people doing distributions, as well as if you're a 316 client, handling payroll submissions and enrollment tracking. So you're going to see a lot more dedication with that. So with that, our team is very excited. We're excited to share that with you. And I think you're going to see a great return back on customer satisfaction. But with that, I think it's good now to talk about Secure Act and some of the new changes, proposed changes that will be happening in the coming quarter or second quarter, I think. So,
Great, thanks Seth. Hopefully those changes make everyone's lives easier, as you as clients, as well as our employees here. So jumping to the Secure Act 2.0. Back in 2019, this original Secure Act came out, and it was a huge piece of legislation, a lot of great changes, a lot of updates, and then COVID happened, as well as the CARES Act. So some of the provisions in there may not have been fully absorbed by everybody, but here we go already with Secure Act 2.0. The House and the Senate actually have two different but somewhat similar bills. They were hoping to have those all combined for the end of the year. It didn't happen, and now it looks like it's going to get pushed back a little bit more into this year. We were hoping for January, but it's definitely going to get pushed back. But here are a couple of the top items that we feel you need to know right now. Number one, student loan repayments. This is something that came out a few years ago as a private letter ruling, so only one company was allowed to do it, but it looks like it's now going to be here to stay. And what this means is that if a company has a 401k plan with a matching component, and they've got employees that have student loans that are participating in the plan, the company can choose to take those matching dollars, and actually contribute those to the student loans of those employees to help them pay off those loans quicker. So that's one item that's coming.
Yeah.
Seth?
Yeah, another big item that's coming is additional tax credits. And one really great thing about the tax credits is this is really going to boost, I think, people starting 401ks, is allowing them to get tax credit on the company match. So what's proposed is that if you put in, let's say, $10,000 in company matches, that can be a write-off on the company as and you get a tax credit for that on your taxes as a business side. So that's a really big tax credit. A lot of people are wondering, how are they going to pay for that? Because in theory, that's going to be a lot of lost revenue from the government. And the way they're going to be able to pay for that, they say, is because they're going to allow Roth contributions to be done on simple plans or something of that nature. So they're getting the tax that way today. So they do have some ways to offset that payment, because the big question is, you give a business a big tax deduction, well, where's that payment going to help to support the rest of the revenue? So that's their thought. But if that gets passed, that's a really big thing for small companies who want to start plans. So,
Excellent. The next topic is higher contribution limits for those over the age of 50. Seth, you want to talk about the catch-ups?
Yeah, so the catch-ups, of course. So right now it's $6,500. That has not changed with inflation. It's proposed to go up to $10,000. And again, as Chris mentioned, the House and the Senate really have two different theories on this and thoughts on it. But to go up to $10,000, I think we will definitely see a change in this, especially because if you look at inflation last year, it was over 7%. And if you look at what the increase was for the highest income from 290 to 305, and then the max deferral from 19.5 to 25. Those are some of the biggest jumps I've ever seen. So I do think it's about time they increase the catch-up. With that being said too, flowing into the catch-up, talking about people that are getting closer to retirement, is the RMDs as well. So the RMD part, they're thinking about changing the age from 72 to 75. Again, this does vary depending between the House and the Senate. So one says they just want to jump from 72 to 75. The other says they want to make it graded. So they say 72, if you're age 72, it's still the same rate, and then it goes, and every year you get a little bit older, it gets a little bit increased based off that. So it's not a jump, it depends on the year you were born and how it increases. So depending on the two, kind of depends on that answer, but that's kind of the theory they have out there. So
nice.
Yeah.
Leave it to Congress to overcomplicate that. So the next topic is something that's been talked about a lot over the past few years, and it's not finalized yet, but if you have long-term part-time employees, these are employees that are working between 500 and 1,000 hours. With the original Secure Act, if those employees are working those amount of hours, between 500 and 1,000, for 3 years, then they would have to be allowed to join your plan. One of these proposals actually wants to reduce that to only 2 years. So if you had an employee working for you for 2 years, working between 500 and 1,000 hours, they would now be allowed to join your plan after those 2 years. So there's a lot more to come on this one. Depending on how this shakes out, we may actually do another webisode just on this topic alone, because it can get pretty confusing and it will affect a large number of clients out there. Seth, you want to talk about the last piece, which is automatic enrollment?
Yeah, so this is I'm kind of excited about this. I'm a big fan and advocate of automatic enrollment. I think it's a great thing for participants. I mean, if you look at all the charts, everyone hasn't saved enough for retirement. And I think we all know the reports saying that you have to be saving between 10 to 15% to have a comfortable retirement. What they're saying is new plans are going to have automatic enrollment. And there's also a cap they're saying if you're under, I believe it's 10 employees or less, you don't have to have it, but 10 employees or more would have to have automatic enrollment. So that's a very interesting proposal they have that I do think is going to get pushed through. And actually, believe it or not, it's kind of interesting. A lot of the Massachusetts politicians are the ones actually pushing this, which is very interesting. Because in Massachusetts, we don't have the mass mandate plan rolled out. California, Connecticut, and some other states have, which I do think is going to be rolling down the line from Massachusetts. But with this automatic enrollment, more or less, it does get proposed, if you have clients interested in starting a new plan, one thing I would recommend is auto-enrolling at a higher rate than a lower rate. One thing that we've noticed here at Compass, and I've seen some studies with it too, is if you start auto-enrollment at a rate of 3%, it's okay. But really start at 6%. It's a much more positive outcome for employees. In addition to that, the opt-out rate is the same. You actually see the same amount of people stay in the plan as not when you have a higher auto-enrollment rate. Not till you get to the double digits of 10% is when you start seeing drastic opt-out rates for automatic enrollment. So I do think this is a good thing. I do think this part will definitely get pushed through. If you are going to do it, I recommend doing a higher rate than a lower rate as well too. So yeah, Chris, your thoughts on auto enrollment?
Thanks. I actually disagree with you here. I think that with the current climate, the issue of having a forced mandate to add something to your plan, even though it is beneficial, and you're right, having a higher deferral rate does not change the opt-out rates. Yeah. But I think there's a lot of political opposition to this right now, even though last year it was all but a certainty. Yeah. So the winds in Washington are shifting very quickly. Yeah.
As you can see, it's the House and the Senate
arguing
between each other.
And we'll keep you updated on what happens there, as more information comes our way and as we kind of progress down the path to this Secure Act 2.0.
Yeah.
So with that, those are some quick updates for you without digging too deep into any one topic. Do you have any questions, folks out there? Please type them in the chat box. Yeah. We actually have our first one here.
It says, when do you expect these Secure 2.0 changes to go through? Chris, you want to take that? Or?
Well, that's a good question. So we kind of talked about this at the beginning. The Secure Act 2.0 was supposed to be passed this past December. Got pushed back. And everybody said, it'll definitely happen. It's one of the first things they want to do. But unfortunately, it keeps getting kicked down the road a little bit. Obviously, Washington's very busy right now. And some of these minor issues between the House and the Senate of, do we do 72 or 75, are dragging out the greater conversation of how do we just improve plans in general. Yeah. So we don't know at this point, but it should be this year.
Perfect. Is there any other questions?
Any other questions?
We'll give one more minute for additional questions. And I think we're good.
Yeah, so as always, thank you for tuning in. Again, we'll be having more of these. The goal is to do one of these a quarter. We'll post this on our website as well for future playback and references. But if you have any questions, please feel free to reach out to Seth or I directly or to our fantastic team here at Compass.
Yeah.
Thank you very much.
Have a great day.